Let's continue that conversation this morning with Dan Greenhaus, Chief Strategist, Managing Director at Solus Alternative Asset Management, who joins us here at Post 9. Happy Friday, DG. Good to see you. So this week, has it been like a healthy breather going into a ramp in the year end, or is the rally as broad as you would have liked?
No, the rally's not as broad as I would have liked. There's a lot of low quality and Bitcoin-related names that have led the way, but also how many people told us coming into this period that seasonals were going to work against the market. So I don't really think that anything that we've seen this week changes the story for me. The economic data has been pretty strong of late. Corporate earnings have been pretty good of late, and for me, that's the overriding theme. Certainly more important than any intra-week trading.
Right. Last night's introduction of some renewed tariff uncertainty, possible shutdown next week. Not to say it's the end of the world, but it's rarely convenient.
I mean, listen, the four of us have been doing this for some time. I refuse to play the shutdown game. It doesn't matter at all for markets. It barely matters.
If we don't get a jobs number or CPI?
No.
If data collection in October stops?
I will not do it, sir.
Oh, wow.
It doesn't matter. It mattered the first time. It has not mattered since. I mean, the first time back in the Obama era. How many times have we've been told the shutdown's coming, everyone gets paid retroactively. Yes, you probably can't go to a park for a minute, and it's terrible if you're vacationing. But for the broader market, obviously, if you rely on government expenditures, maybe there's an interruption. But for the broader market, it doesn't matter.
And how about the tariffs?
Well, those certainly matter. We got new data today. Goods within the report that are more likely to be tariffed are going up more than elsewise. But to Sarah's point earlier, we've done really well here. There were a bunch of us that were telling people if tariffs go up by 25%, that doesn't mean consumer prices go up by 25%. There will be some burden sharing between exporters, importers, the consumer, and that's what's happening. And when even the Fed chair is telling you tariffs, inflation has not gone up as much as we thought. For lack of a better word, from the market standpoint, that's a success.
Although the chair also said that it's probably why some companies are not hiring.
Yeah, no, there's a lot of cross currents.
It's not all just about the price increase.
Listen, for me, as I hit my mic, I apologize. I think the market is too sanguine about the forward. To echo Ken's point, the market is too sanguine about the next 9 months. I'm a little more nervous than the average investor. But listen, again, the tailwinds here are pretty strong. The economy is doing pretty well. Corporate earnings are doing pretty well. Costco yesterday told me inflation wasn't a problem. The Fed chair is cutting rates, probably another couple. That, all else equal, is probably a positive.
I think the biggest positive, actually, of the morning, the one surprising data point was the personal spending number.
Yeah.
Up 0.6%. The strength in the consumer spending, despite elevated inflation, despite tariffs, despite all these sentiment indicators, is holding up very well.
We were internally at Solus yesterday, we were talking about Vegas and the casinos and how there's this narrative going on online that Vegas has gotten too expensive for the average person, et cetera, et cetera. To your point, Sarah, the entire economy has been luxurified. Everywhere you turn, everything is better than it used to be, fancier, more expensive. And the U.S. consumer has powered through it quarter after quarter after quarter. We keep getting told by people, oh, this is going to break the consumer. And every time Visa and MasterCard report, yes, sentiment is not great, but consumer spending, despite all those changes, is doing very well.
Trips to Vegas are down like 6 months in a row, year on year. Hotel occupancy rates are down a full point year on year.
To 96.
So, I mean, it's true. If you own stocks, you feel great.
Yes.
If you don't, you're part of CarMax's quarter, right?
Well, to some degree, that's fair. Certainly, if you own stocks and stocks are at a high. However, I keep hearing from everything from Dollar Tree on up to higher-priced retailers. Look at O'Reilly and AutoZone. There are huge parts of the economy that are doing fine in this past earnings season. For companies that I'm blanking, maybe it was Signet or a couple of other companies that recently reported. We passed through price increases, and none of our income cohorts responded in a negative fashion. And that, more or less, that sentiment has been echoed across the board. Now, mind you, again, to the larger point, tech is doing a lot of heavy lifting here in the broader market. There's no doubt about it, obviously. And how many times have we talked about whether this is a bubble or not, akin to the 90s? And I don't think many viewers may know, despite our youthful appearance, all four of us were there.
Not you, come on.
I came later than the two of you, and Sarah later than all of us.
We haven't talked nearly enough. We're going to keep talking so much more about it being a bubble, Dan. We've just gotten started. Are you kidding me?
I'm glad we're talking about it very quickly here, because you would know as well as anybody. We were talking about the tech bubble in 1997, 1998, and
Yes.
it went on and on and on.
It did.
And it wasn't until the back half of the 90s, till MCI WorldCom and Sprint broke down, which you're surely familiar with, viewers probably not.
Yes.
I don't think we're anywhere near that.
No,
and
no.
so you have these strong tailwinds for the broader market in place a la 97, 98.
Would there be a tell at all in terms of when the time might come that we should be taking seriously all the capital that's being spent and the concern about whether or not it's going to actually see a return?
At the risk of looking terribly foolish, I think yes. And again, when we hearken back to those days, and you all will remember this, you got warnings profit warnings from Lucent and
Nortel?
Of course, Nortel. Eventually, Intel was warning that there were revenue wasn't going to be growing as much. And we've all heard the stories about having built 80 million miles of fiber, although I'm not sure that's an accurate number. I have no doubt that today, and again, you guys were there, that today echoes a lot of that. But again, it echoed a lot of that in 96. And
so you got to keep dancing as long as the music's playing.
I talked about this with Scott the other day. I mean, Chuck Prince gets roasted, got roasted. No one cares anymore, but got roasted at the time for saying that. But there is a lot of truth to that. The music is still going. The party it's still early, so to speak. I have none of those warnings that I, as an investor, would be looking for. And I know Michael Semblist put out a big note that got a lot of attention about how much AI is doing in the market. Totally fair. These companies are humongous, although Microsoft is not one company. It owns LinkedIn. Amazon owns Whole Foods, et cetera. There's a lot underneath the surface there. But there are other stories going on besides this. Ulta is back to a 52-week high. GM is back to a 52-week high. I'm glad I brought this up, although I looked right before I came here. There's 120 stocks that are at 52-week highs. More of them are financials than tech. There are as many industrials at 52-week highs as tech. So there, as an investor, as a stock picker, as a credit analyst, whatever you may be, there is other stuff going on besides that.